You better believe it. I wore this green shirt last night and try to actually help the market get a bounce here. So I'm doing my part. What are you doing is the question. Oh, I'd like to welcome everyone here today. Today's date, Tuesday, April 28th. Chilly morning in Salt Lake City this morning, 33. And here we are on the Investing Master Series. Got Barbara Armstrong with us in the chat. We welcome her and all of you out there. Got a lot of great examples that we could talk about today in terms of management and also new examples. I think it'll be impactful. All right. So one thing that we actually discussed is the last week we talked about rolling options and adjusting strategies. Number two, we talked about selling puts as a trading strategy. 3 weeks ago, we talked about trading cash secured puts and so on. I'm explaining this so you can kind of get a flavor of what we're talking about. Now, you got to remember when we talk about trading cash secured puts, selling puts, etc., these are stock buying strategies. Don't forget that. Okay. So if you're saying I'm trying to buy stocks at maybe a discount from where it is, that is a strategy that you're trying to do that. Now, you might miss it. Okay. Probably that happened quite a bit lately, but that might be okay. Now, remember that today I'm going to kind of talk about that, continue that theme. Also understand that short vertical puts, is another way to try to buy the stock at a potential discount. That's an option. Now, also remember as we get started here today, remember you can follow Barbara right on X. She posts educational examples there. And also myself, I've occasionally posted on X a couple times, only 22,500 times in the last 5 or so years. I mean, maybe you catch a post or two. Some of the things are educational nature. Some things are, there's a little humor. Feel free to watch and look at it. Now, just real quick as we're getting started, I want to give us a quick reminder that when we talk about examples, there will be stock and option examples, or the combination of that, like a covered call and so on. Now, remember when we talk about those options, remember that options carry a high level of risk and are not suitable for all investors. The information here is provided for general informational purposes only. When we talk about examples, we will do those on the Paid Money software application. Investing involves risk, including loss of principal. And also when we talk about short options, like selling calls, selling puts, those can be assigned at any time up to expiration, regardless of the in-the-money amount. So let's go out and take a look at the markets, and then we're going to look at some examples right off the bat. And those examples, we're going to talk about Micron, Amazon, NVIDIA, UNH, CVX, Google, and so on. We're going to look at some past examples and some new ones. So let's buckle in. So first off, when we kind of talk about markets, we're kind of always assessing risk, right? And what the risk that we've been talking about the last couple of weeks has really kind of been, what has oil been doing, right? Oil actually this morning, if we take a look at oil, kind of looking a little perky, okay? And if we look at oil, oil went up to about 101. Now, on this chart, if we pull up the SPX, you'll see that if you look at the market, okay, now remember when we talk about correlation, you can go to +1 down here on the right-hand side, and then -1. And a lot of times you're going to see that if we have a negative correlation, what does that mean? So if I look at the chart SPX, which is up top, and crude oil on the bottom, and it has had almost a negative correlation to some degree, what does that tell us? Well, if we see SPX going up, crude oil could be doing the opposite. If crude oil is, let's say, going up, you can actually get the SPX going down. Now, sometimes there can be like more of a neutral correlation. Correlation is not set in stone, just like relative strength isn't set in stone. And if we actually have correlation of like more zero or benign, there's not really that positive or negative correlation. It's nothing, okay? But lately there's been a lot of that negative correlation, whereas if the market went down, crude oil was doing the opposite. Now, another way we could see that is just overlay crude oil on top of the price chart. That's another way you could do it. Now, so that's why we talk about actually crude oil. The other thing we want to kind of keep an eye on is what are rates doing. We see the rates actually ticking back up 4.35. We actually see the US dollar not breaking out to a brand new high. Okay. Yesterday it pushed up a little bit more. And now remember, the US dollar, the reason why we bring up the US dollar is that can have an effect, let's say, on precious metals. Speaking of that, gold bent down. Silver bent down. And even if you look at high-ho copper, you're going to see that that is even under pressure as well. So that's why we're watching the US dollar, okay? People are playing that correlation, okay? Now remember, correlation, you can put price graph on top, okay? On top of each other. You could go to style, and I just want to show you this. Style. Well, actually, let's go to studies. And what I'm going to do is add study. And you could say, look, I want to do compare with, and what I'm going to do just for this example, I'm just going to bring up the XAU, okay? So what I'm going to do is I'm going to bring up the dollar, okay? And this purple line here, that is really the gold and silver index. Now, sometimes what you'll notice is when the US dollar, let me back that off, when that US dollar actually has dropped, okay, sometimes there can be that pause, that index where it's gold and silver to the upside. You see the US dollar, okay, US dollar candles dropping down. And what happens sometimes is you get the opposite effect. Again, these are not new things. I'm just showing you different ways in which you could see it, okay? So some people kind of like being able to see the correlation on the price graph. Some don't mind to see it on the bottom. I'm showing you both. Pick the one that you like for yourself. How do you get it off? Right click on the line, remove it, and there it goes. It's gone. Okay, now let's kind of go back to what about the VIX? Okay, when we take a look at the VIX just real quick, staying right in the range we thought, 16 to 22-ish, okay? Not seeing this pop out. Now, the one thing we've got to say so far is with oil actually going up to 101, rates actually pushing up, dollar actually somewhat bullish. Historically, we would have seen maybe this market, at least in the last maybe 2 months, maybe just completely fall apart. And those bears would have been saying, yeah, just like I said. Well, let's take a look at the market. Oh my gosh, we're crashing to the downside. Oh wait, no. 0.7%, okay? So maybe not crashing. Is there some profit taking in some areas? Yeah, we'll talk about that. But so far, I mean, we're not even taking out some of these lows that we actually had from a couple of days ago. Now, I know there's some of the bears out there that are saying, I hate what James is saying. I want it to go down. I know who you are. If we look at the NASDAQ, again, the NASDAQ, if we take a look at that, we haven't even taken out the prior higher low. The SOX, after 20 days, at least it felt like longer, you finally got a drop. OpenAI actually had the earnings, and you actually saw that they came short of their earnings, and things like the SOX semiconductors, which we're going to go into, fell down. Now, here's the thing you got to remember. Don't feel bad for those semiconductor traders. There was 20 days of just green candles. You would think if you go up 20 days in a row, you might be able to maybe make a penny or two. Maybe. Okay? Now, what about the Dow Jones? Not really falling apart either, but pullback. Now, remember, what we've been talking about is the flag, right? Flag. So far, not much of a pullback. And the Russell, if you look at that, that one is a little bit more heavy-handed in the fact that you've had bigger candles like today, and you're going to see over the last 5 days something that as bullish investors we don't like to see. Like what? We don't like to see that upper shadow right at the moving averages. Don't like the upper shadow right at the shorter-term moving average. Don't like that. Don't like that either. Here's the hand, right? Here's the hand. And then today, here's the hand again. And so when you're seeing, if you're bullish and you're seeing the price intraday, not being able to get above the 10, not great. Now, let's talk about the semiconductors just real quick. Example given number one is we're going to look at Micron. Now, some of you are probably looking at this. I don't know what you look at. I don't have any access to what you have. I'm an educator, okay? Now, if I take a look at this, I'm going to pull up this example. Now, some of our examples are going to be on past trades, some will be on new trades, and so on. Now, what you're now going to notice is we have Micron, okay? We have the 380, the 370 put. Now, you might say, well, my gosh, that kind of seems low. Well, it kind of is. Now, today, what you're now going to notice is the stock is down $30. Now, we could ask ourselves a question, was, could you not have gotten out yesterday? Was there not enough profit? Well, we'll take a quick peek. But what I want to kind of show you is just real quick that's kind of interesting is you would think that if the stock was down 30 bucks that we gave back the mother load. We gave back $30. Okay? Why is that? Does anybody know why that is? Why did it only give back $27? Now, the hint, I'll give you, okay? You're short the 380 and the stock's at 492. You're $112 away from the short strike. So you're so far out of the money. When you're so far out of the money, the delta's low. So when the price goes up or down, it's not really affecting those options. Well, we got 17 days left. We don't need to do anything. We would never say something so naive as that. Because you could be at a nearly 100% profit and have 30 days left if you got a big move in your favor. Now, what we could do is going to go to the setup, go to application settings, top right, setup, application settings. Now, I don't set buybacks, okay? The reason why I don't set buybacks is I want us to do the trades together so we can learn. Now, what I'm going to do is going to go to positions, data open. I'm going to go percent open. Now, obviously, if we're going to avert anything we sold, we're saying what percent of that maximum gain do we have? Even with that $30 pullback, we're still at 81%. Tell me what the paper money account should do. You're typing in quickly and you're saying, James, get out of the position, take the $274. Now, before I do that, tell me why we're not going to roll. Why are we not going to roll? Well, usually if we're going to roll, we want it to be showing a new entry setup or something that's in the upward trend. We're not rolling on a red candle or something that's below the moving averages. We're not. I don't show that. Maybe others may know. Okay. Now what I'm going to do is going to go back to that. We're going to actually click on that right there. Right click, create closing order, and we're going to buy it back. Okay. Now, so that's first. Okay. Micron. Now the other semiconductor that we talked about yesterday, and actually let me go. I'm going to go to that one right after this next one, since we already have this one open. The other one that we actually have, so we're going to exit this position. We're going to try to, as Bill would say, harvest. I got to give Bill credit, okay? And what I'm now going to do is, it's already in the mid price, confirm and send, okay? Now notice we're buying, we got in for a credit and we're getting out for a debit and paying that commission. Now we might say, James, there's no way on earth that we could come back down to 380. We would never say such a thing, okay? If you got time left, you could give it all back and risk the spread, okay? We're going to send the order and see if it fills. Do not assume that it fills. When you're that far out of the money or that close to expiration, fills could actually be a little harder. So we're going to watch that. Now, the other one we want to bring up real quick is Intel. Where's Intel? We're talking about the semis here. Why are we talking about these? Because these are, since semis went up and we just saw some pullbacks yesterday on semis, you might have some examples of these too that you could relate to. Well, you look at Intel just real quick, is we sold it for 286. Okay, now Micron got filled. Now I'm in a paper money account, okay? Now, number two, when you look at Intel, sold it for 286, we're at a nickel, okay? Now, the rule of thumb is, if we could buy the short position back for a nickel or less, it could be commissionless, okay? Now, what I'm going to do on that, we can also see the percentages, okay? Now, option number one is if you said, you know, James, I'm not going to get rid of the 36, but if you leave that there and the stock closes below that long put strike, that can become short shares. If you say, I don't even know what that is, then to be prudent, the investor would say, I'm going to try to get out of that, okay? If you know what short shares are and you don't mind that, you might leave that there. But there's a risk of that stock closing below the strike. If it does, it could actually become more valuable. What we're going to do in this case is we're going to right-click on this, create closing order. We're going to sell, okay? Wait, are we going to sell or are we going to buy? Well, we sold to get in, okay? You sold it for 286, sell high, buy low, and we're going to try to create closing order, buy it back, and the goal is to buy it back as close as we can to zero. The only way you get all of it, okay, is you got to hold it all the way to expiration or have the stock explode in your intended direction. Confirm and send, close her down. Now, if we take a look at that, how much is that? About 224. Okay. Now, again, just like we said, just because we put the order in doesn't mean that it's going to fill. That price could have been moving around on us as we were talking there. So we'll give it 2-3 minutes. If it doesn't fill, we'll adjust. But the goal is there's profits to be had there. Okay. Now, we haven't made anything yet. It's just paper money until that trade is filled. Now, it's paper money. It's a paper money platform. Okay, fine. It fills at 6 cents. Now, the other one I want to bring up just real quick that we talked about yesterday was NVIDIA. Okay. Now, OpenAI this morning pushed those chips down. We saw some big moves actually in NVIDIA yesterday in terms of price. We also talked about it in terms of volume. Some of you love that volume. You're just like, look, I want mashed potatoes, the price, and the gravy, the volume. Okay? Some other analogies we could go with there. Now, if we said, well, is the volume still there or is it dried up? Well, let's double check together. Okay? Now, we're going to go to the trade tab. And what we're going to do is, and we're not going to adjust the position from yesterday. First off, the ones that expire tomorrow, gosh, I mean, they're pretty large. Now remember, this is the volume. This is not the volume from yesterday. This is the option volume for the contract, buying and or selling for today. So here we are about not even 2 hours in, and man, there's some serious volume on this, okay? And it's not just on one strike. It's plastered. I mean, you got a tenfold almost right there at the 215. Now, what we do not know is, are people buying those calls or are they selling those calls? We don't know that. You would think that if someone was maybe had some experience, you might guesstimate, are people buying or selling? Now, there's some people that always just like to take the opposite side. There is, but you probably say on the majority basis, probably more people go with the trend, okay? Now, if we look at the put side, we're seeing the same thing, okay? Volume, open interest. We look down at the ones that expired in 3 days. Friday, same thing. Almost 100% of the open interest. A third, 100%, quarter, 50%, 50%, almost 100%, and that's about 65%. So we're not seeing that drying up of volume here, okay? And you look down the table there, 10 days expiration, you look at, let's say, the monthly options, still seeing some pretty good activity. Let's see if it's going down to the Junes. It's getting better. The Junes were not as heavy. It looks like we go out to the May expiration, there's still quite a bit of activity. Now, what you want to see, if you're a bullish investor, we want to see this kind of fight back where that interest in NVIDIA, that people hold that trend, right? The price going down 3% might not be the backbreaker to trend, okay? Now, it got pushed down here today, and since we're in the earnings, you could get other companies that are in the same space that might affect what NVIDIA says. Now, the thing we need to are how NVIDIA might perform. The thing we need to recognize here is OpenAI came short, okay, on the earnings. That's not to say that those earnings could not be realized this next quarter. They just might not have been recorded and fulfilled this quarter. So that's what you got to remember, okay? Now, just real quick, any questions? Now, the question from Pia is, what does drying up of volume imply? Well, Pia, let's say you own a store and you sell, for example, pickleball equipment. Oh, Pia. And so here's the deal. Let's all of a sudden say at one point, man, you had to literally hand out a numbering system to come to your store to pick out pickleball equipment, okay? You couldn't have everyone in the store at one time because it was just so full, okay? Now, that's an amazing scenario. That's kind of like what we're talking about right now in NVIDIA, where the last 2 days at least, that demand has been so high. Now, what happens if it dries up? Where all of a sudden you open the store, no one's there, and cricket, 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 cricket. No one's there. And if they are there, they ain't buying nothing. Well, what does it mean for the store owner, right? Well, not great, okay? You're burning your cash as you're waiting for those buyers to come in, okay? That's the example I'd give. The reason why people like the volume is it's really showing demand. Again, is it saying that everyone is buying? No, okay? But the biggest actually thing is there is that some of those in the volume, those could be buyers. And when you buy calls, it's the right to buy the shares at the strike price. It's a way to do it. If you sell the put, it's a bullish position. You think it's going to stay at or above, okay? Now, I wanted to go to just real quick, our first trade example. Now, we're going to go back to just real quick UNH. We said yesterday, keep an eye on UNH. Now, UNH is in what index? Almost one of the first lists you should look at. The Dow. And so when you look at the Dow, we're going to scroll down here for just a second. And when we look at the Dow Jones, we're going to click on this percent change. Now, we know that Coca-Cola actually shot to the upside here today on earnings. And the second horse that was in there was UNH. So you didn't have to go down through the list. You could just literally just look at the list and say, oh, Coke, UNH, CVX, etc. Now, I want to talk about this UNH and CVX. Now, the reason why I hit this is a lot of times people say, no, I didn't see that. That makes me so worried because that tells me that you're not looking at some of these bigger horses, okay? That also, number one, they're large caps. Number two, they're proven business models. Doesn't mean they're always going to be proven business models, as we know. And also the thing is, sometimes there could actually be liquidity here, stocks and options. Now, example given, we said, could this be could this be something that continues to the upside? Second, we said yesterday, the longer that we hold up near the resistance, the 355, well, the greater the chance that we could break to the upside. Now, when's the earnings? You already had the earnings, okay? Now, what I'm going to do, because sometimes I get asked, hey, can we show a stock trade? I'll show you a stock trade, okay? We have stocks too. We actually pull up the UNH, okay? We pull up the UNH, we pull this up, we're going to right-click on the chart, okay? And when we right-click on the chart, let's imagine that we said, hey, I want to, for example, okay, there you go. Right-click, buy custom with OCO bracket. Now, I'm going to ask you a question, okay? Where would you say that the support level is? Now, this is, you might say that's not a big question. Why do you ask? Well, the reason why I ask this question is a lot of people, they struggle. If I get in, where am I going to admit where I'm wrong? Now, we're people. We don't like to admit that we're wrong, okay? But being a good investor, that is a good practice of where are you willing to admit that you're wrong. And you want to admit that ahead of time, okay? I know this sounds like marriage, okay? And trust me, it took me a long time. If Miss Amber was here with me, she would say, yeah, I got it. Let me tell you, it took him a long time, at least 10, 15 years to admit when I was wrong, okay? My wife has been wrong 3 times. I write them down. And when she is wrong, it feels so good. Now, here we go. Where's that support level? If I drew a ruler, flat, horizontal, or diagonal, where am I going to get some touches? Okay. Well, where am I going to get some touches? Right there, the most immediate support level, the last couple of days. That 349, okay, 349 less 2%, you got about 342.02. Okay. Now, that's the downside. Now, I'm kind of a negative person. Okay. So how many of you are thinking, look, if I'm going to invest, I want to protect my money. You get what I'm going to right there, right? When I moved down south from upstate New York, Ithaca, down to Bowling Green, Kentucky, north of Nashville, I remember a good old boy at the BP gas station says, how do you have a wad? You become a tight wad. I always remembered that. Now, I'm not a tight wad, but I want to know where the money's going, right? I want to protect the capital because that capital could compound over time. Okay? So now, tight wad is viewed as negative, but you're being prudent. Now, 342.02, dated GTC. Now, you got to ask yourself the question is, where's the upside? Got to go back on this chart, pull this up, anything above us. When you look at above us, the only thing that we really see is this is where we had a gap down, 379, got about 2 touches there. And anything, if I went back on maybe a 3-year weekly on this chart, kind of overhead on this, you got really about 450. And then really what you saw, you saw the big move down. I'm going to use the Fibonacci too, but to the downside, okay, to kind of see some of these levels. I'm going to draw it from where we had most touches down. Now, I'm not going to take it to the extreme levels. When we say support, he or she that gets the most touches wins. Okay, we're not drawing from the very tippy top to the down low because you get extreme readings. You're probably going to be off because you're taking extreme measuring points. Okay, it's like taking an average versus a median. Okay, that's why people, when you look at statistics, they're not looking at just averages per se because they tend to be bloated up or down. You tend to look at medians where you get the fat part of the data set. So when you take a look at this, if we said, look, Fibonacci, say 391, second would be the 50% at, let's say, 433. Now, what I'm going to do is I'm going to put that Target, no, I'm not talking about super Target yet, 391, okay? I'm going to put that right here, 391. Now, daily GTC. Now, we know from history, some of these healthcare utility staples tend to do better when the VIX is low and starting to go down. Wait, is that true? Did I say that right? No, we did not say that right. The healthcare utility staples, they tend to actually be somewhat negative correlated somewhat to the market. The performance of the S&P tends to be negative if we see utilities healthcare staples go up. Now, saying one healthcare stock's going up and then painting a picture that the S&P must go down, that's a little tough to connect. But if you get more and more stocks in healthcare, utility, staples going up, you'd probably say the S&P could be flat to pulling down if you go back and look at history. Now, what I'm going to do is I got a target, stop. We're going to say, look, go to the pool balls, percent, dollar amount, if we said the capital. If we said the capital here in this case was, let's say, $4,500, it's going to give us, in this case, 12 shares. All right? Now, any questions? Now, the comment is like, so are you using 2 ATR? No. Now, ATR gives you a recent gauge in terms of the movement in price from low to high. ATR, average to range. Some people use that as stop methodology. The methodology that we use is looking at the recent support areas, okay? It's not a bad idea, though, that when you say, if you use the method we're talking about, look at the recent support and then set the stop below there, and then double check. So if we said, hey, we're going to get in at 364, and then we set a stop at 382, what's the movement there? Well, that's $22. If we said the ATR was $30, then we're setting a stop inside that ATR. What would probably likely going to happen? The chance of getting stopped out would be enormous, okay? Now, if you just say, I love getting stopped out, well, go for it, right? If you're saying, no, I don't really want to get stopped out unless the trend is going against me, okay, and I don't want to be in anymore, that's why we set the stop the way we did. Now, you could double check, what is the ATR? I'm not going to do that for time's sake. We're saying if we go down to 342.02 or lower, sell the stock. Trade number 1, UNH, okay? And if we go back and say send that order, there it is. I'll have to fix that, okay? Yeah, so now, if we go back to just real quick, something we made mention of yesterday that we just want to double check Google, okay? Now, and then I'm going to come to CVX. If we look at Google for just a second, that has been one. I just want to just take a quick peek at it. Okay. We did that example yesterday. I don't have anything new to say. I just want to kind of see where it's at. Okay. Holding today's intraday low right at the 10 period moving average. Now, you could also say to some degree that when we look at this old high there, now remember when we talked about the 5 different bounce setups, right? Or what we call dips in price and where are the potential reentry setups? Well, what you're going to now notice is there's the whole day, there's the brand new high. You're going to see that these 2 days right here, again, we want to go back to the trusted moving average envelopes and ask ourselves the question, how high is this? And the answer is we're barely above the yellow line. That yellow line is 3% above the 10-day exponential, which means we're not as high as we think we are. Today, intraday, we got down below there. Some people, they like to buy in between that 10-period moving average and the yellow, so they're a little bit closer to a support. And that 10-period moving average tends to be the support for a momentum trader. Okay? So there's been a lot of buys lately on that one. Now, we know there's earnings coming up, but if we said, is Google maybe going to surprise some investors potentially over the earnings? I'm going to take a quick look at kind of that volume just real quick. Volume right there, let's say 50%. Not that one's 50% right there. Okay, when we look at the others, I'm just going down the page just real quick. Do we see anything else? The biggest actually thing, I don't see anything standing out like NVIDIA does, okay, on either side right there. Now, does that mean that it can't have stock volume? You'd have to pull it up and look at it, okay? Now, when we take a look at the other one just real quick, CVX. Now, let's kind of show this just real quick, right? So when we look at one, now I'm going to show this in both ways, okay? On the bottom of the chart, crude oil, okay? Light sweet crude oil. And what you're now going to notice is we do see quite a bit of time where we're at least a half, 0.5 to 1, okay? So remember, if we get 1, that is actually saying the chart up top. If the chart goes up, crude oil has been going up. Now, are there times where if crude oil goes up, that actually Chevron goes up? Yeah, there's been times where that correlation has been really high. Now, if we said high correlation, how high is high? I'd love to tell you. 0.7 is pretty high correlation. If you said 0.9, high correlation. To say that it has to be 1, and if it is, it's probably not going to stay there very long. But if you got anything 0.7 or higher, that is high correlation. 0.9 or higher, really high correlation. Now, so if we're kind of doing our daily routine and we're seeing crude oil to the upside, we might ask ourselves the question, what energy stocks has a high recent correlation and shown a history of that correlation? And that's what a lot of people don't kind of understand. Now, if I was standing outside a Chick-fil-A store and there were people going in left and right, fighting for those chicken sandwiches, I would love to be the person selling barbecue sauce, the Chick-fil-A barbecue sauce, okay? Now, or I could take this and say a hamburger. I would love to be the ketchup salesman, because if people are actually going to have, let's say, a chicken sandwich or a hamburger, they probably want something to put on top of that. Now, the same idea, that if we actually see crude oil going up, what complements or what correlates to that? People just blow this off like, oh, crude oil going up. People totally forget, okay? So think about this. If they're selling a lot of chicken sandwiches, what else goes with the chicken sandwich? If they're selling a lot of hamburgers, what condiments go with that? Or another word for condiment is correlation. La la. Okay, now, and this is where it gets really exciting. Okay, so you're not just thinking about one chart. You're thinking, okay, if that oil goes up or gold goes up or whatever, what has had a high degree of correlation? And by the way, this is what investors who have experience, they look for that on purpose. Okay, now if you invest long enough, you kind of remember these things. Okay, now what I'm going to do is we got earnings coming up, and with that earnings coming up, some people might say, oh no, earnings coming up. Now, we know that there's been a recent pullback. What's been nice about Chevron pulling back downtown is really that we're falling back down to that support level. Now, do we have any earthly clue what the earnings is going to be? Nope, we don't have any clue. Now, they're probably not going to be negative earnings. Maybe they could. Okay, maybe if they had some unplanned expenses. And if we took a look at this, if we saw oil actually go up, they might forecast the earnings higher going forward. Because some of these forecasts were done a quarter ago, 2 quarters ago, 3 quarters ago, a year ago. And if all of a sudden they go into that earnings and say, hey, look, we're going to guide our earnings forward. We might raise the potential dividend, not guaranteed. Okay, they could cut it completely. But they also might say, hey, given the price of oil, we're going to make some CapEx investments per our free cash flow, net income being higher than what was expected. We have some extra cash, blah, 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 if they did. Now, I'm going to kind of show the example. Now, one of the risks of stocks, and I want to kind of show you this. When you buy a stock, let's say you buy 100 shares for simple math, okay? And let's say that this was 0, okay? The stock doesn't go anywhere. Well, if we buy 100 shares of stock, well, if we go up +1, +5, +10, we could do the math. I got 100 shares. I'm going to take the stock movement, okay, stock movement, and I'm going to times it by the shares, okay? And what this does is it gives us the money. That's not a surprise. And so if it goes up, we're thinking, I'm happy, the investor says. Now, if we take that and say, dadgum thing goes down, okay, same thing as before. Stock movement, let's say it goes down $10. And then how many shares do you have? Well, all of a sudden, you're actually now negative dollars, and all of a sudden, you got frowny face. So a lot of times people say, I'm not going to invest around earnings because it's too risky. Well, it's a strategy that you're picking, okay? If you know that if you're going to pick 100 shares of stock, the directional sensitivity on the scale of delta is the highest. The only thing that can replicate it is a deep in the money call, way deep in the money call, and or a long synthetic, okay? So this is where the investor might say, look, I'm not going to take a strategy that is so directional. Now, I'm going to do that anyway, okay? Because people don't understand that this up or down stick is the price movement. The higher number of the shares, the greater you could go up or down. If we change the strategy, we could somewhat mute to some degree the price fluctuation. And that's called welcome to options. That's called welcome to verticals. That's called welcome to cash and carry puts with downside protection. I'm not sure if people really understand that. And I've lost sleep over it lately. Okay. Now, what I'm going to do in this case to kind of press my point, we're going to buy shares. Okay. And if this goes up, the investor might feel like I'm a genius. If the stock actually goes down, they might say a comment like, dadgummit, maybe buying 100 shares of stocks right into the face of earnings is pretty risky, which is kind of what we just said. Now, if I said, could it swing? I'm not going to put a target right up at, let's say, 212. I'm going to kind of put a target right at a gap down level. Now, one of the gap down levels is, I'm going to kind of mark this right there. We have said before multiple times, when you gap down and if the candle's red, the first resistance is that open price, and we marked it. When we gap down again, if we look at this and say, okay, we gap down right there, What's the first level resistance on the green candle? The closing price. Red candle gap down, the open price. The gap down, if it's a green candle, the closing price. So these now become markers for us. Okay. And how did you come up with that? I've looked at a couple charts over my time. I've seen a couple gaps. Okay. And you start to see patterns of what could become support and resistance. Translation resistance for us English speakers. Now, could we actually do a trade for 192.94? Probably not. If the investor said, look, I want to kind of put a target right at 202, I'm going to put it right there. And here's the deal. On something like this, we're probably not going to want to set a stop like $3 or $4 down per your comment, because the ATR would be probably that in general. What I'm going to do is I'm going to take 180, 185, okay, less 2 to 3%. We go 2% on over 50 bucks. 187, 180, excuse me, speak German, sorry, it's always backwards. 178.21. 178.21. Dated GTC. Now, how can we try to make the movement not as brash? Cut the number of shares. You cut the number of shares, you cut the delta. You cut the delta, you cut the profit loss up or down. Okay? And people don't understand that you can adjust that. And whose decision is that? Yours. Okay? So if we did that and say, look, I normally get in $9,000 at a time, well, I'm going to do only half that. And by doing half, lessens the number of shares. We move up or down, it's not as bad. Now, if it goes up, we know what's going to happen. I wish I would have bought more. If it goes down, you're going to say, why, my gosh, I'm so glad I didn't buy more, right? That's what happens in our minds, okay? Now, any questions? Any questions? Now, wait, is this an option or a stock strategy? Well, it says stock. This is a stock position, okay? Now, remember, why does someone do stock? Well, one of the main reasons is they're trying to get that dollar for dollar fluctuation. Okay, that is probably the main reason why they want that. Could it be a part of where they are in terms of learning? Sure. Could they not want to do options? Sure. Okay. The other reason why they might want to do it is maybe they want the stock because they maybe want to also try to get a dividend if they pay it. And second, if they continue to pay it. So there's reasons. Okay. Now, the comment is, can we do a long synthetic on this? I got like 1 minute left. So the answer is, if we had more time, we could. Okay. We'd have to double check the liquidity on that to see if we're thinking that's probably a pretty good chance. Okay. If we had more time, Pia, we could consider it. I'm going to go confirm and send, and we'll send that order. Now, I want to kind of make mention of a couple charts to keep an eye on in the last 1 minute. The other chart that's kind of poking a little bit is Altria. Keep an eye on that. Kind of maybe trying to show a little reversal. Okay. Now, if we go back and look at, let's say, a stock example given like TRV, that is another stock that is kind of trying to do that reversal / continuation pattern. Keep an eye on that. Apple. Okay, Apple's kind of, there's been a lot of speculation on this September upcoming product release. Are there foldable phones? Are they going to be as cool as Samsung and so on? You decide, okay? Also, if you look at, let's say, a stock like AP, which is getting into the utilities, okay, kind of a continuation. And if you look at another stock that might have a high degree of correlation to what oil does, it's probably Baker Hughes, okay? So, and if I bring up one last one, if we're talking about your classic cup and handle type pattern, Franklin or Ben, it's kind of showing your classic little flag back with a little curl back to the upside, okay? Now, technically, today is my day off, but I wanted to teach, okay, anyway. I mean, why not? I mean, we're going to look at the market anyway. So we had a little fun here today. You guys were peppy today. I mean, there was a lot of pep today in those comments here, and I like that. I like it when it's spicy, okay? And I want to say thank you for that focus here today. Thanks to Barbara as well. We have coming up next, let's go back to that just real quick. If we go back to the next session, we'll go back to live webcast and virtual workshop right on the coaching page. We pull this right back up, and coming up next, getting started with options, Mr. Cameron May. Join us also for, since Barb's with us, she'll be doing getting started with technical analysis at 2 p.m. Eastern. Now remember, with what we discussed here today, it was done for example, illustrative purposes only. Talking about different strategies. And as investors, we know that we don't all like the same things, and sometimes we want to kind of pick the strategies that might make the most sense for you as you consider what might be appropriate for you. Now, remember, with what we talked about today, all investing involves risk. This has been the session on Investing Master Series, talking about past and new positions. Stay tuned for Cameron May coming up next. Take care. Bye-bye.